I'm Dan Passarelli with MarketTaker.com here on the CME trading floor. Well, one of the stocks we looked at today in our Market Taker Live Advantage Group coaching class was in Wynn Casinos, symbol WYNN. Take a look at a chart of Wynn. Now, Wynn is an interesting stock to look at. It recently had earnings, and what happened? Nothing happened. There was basically no activity following earnings, and right now there's pretty strong resistance, potential resistance, at about $95 a share. Now I look at this and I'm thinking, hey, here's a pretty low volatility environment. Earnings didn't do anything for this. The VIX has kind of come down a little bit. I think that over the next couple of weeks, Wynn probably isn't going to go too far, definitely not above resistance at $95 a share. So the trade that I like is selling the regular May expiration 95-100 call credit spread in Wynn. Now, I like this trade because, again, it's a low volatility environment. The chances of Wynn going up above $95 a share through that resistance point, I think, are pretty small. I think there's a really good chance of staying below there. And so it's a reasonably high probability trade, pretty good risk-reward ratio. If, however, it turns out that I'm wrong, let's start with that eventuality. If it turns out that I'm wrong, I would maybe think about rolling up, doing an adjustment and rolling up to a higher strike price. Maybe rolling the 95-100 by using the butterfly roll to be a 100-105 credit spread. Now, if I'm right, and if the stock stays where it is and time passes, I start making money on time decay, or if the stock begins to fall some, then I'm not really looking for the whole shebang here. If I can ever take my profits at 75% of my maximum profit potential, that's what I'm going to do. This is Dan Passarelli of MarketTaker.com here on the floor of the CME Group.